Hi, welcome back. This is Adam again, welcoming you to another episode of the Real Estate Investing Explained series. And in the last episode, I gave a shout out to Small Change for their support in putting this series together. And what we looked at was the value of impact investing through real estate. But what we all really want is some return for our investment, don't we? Right? So how do we figure out exactly what kind of returns we're going to be getting? At the end of the day, when you look at a project, you want to know how much money you're going to make so you can measure that against the risk. Well, a great way of figuring out what kind of returns there are and understanding how projections work is to look at what are called full cycle real estate projects. And a full cycle real estate project is where the sponsor has purchased a property, executed on the business plan, sold the property in all likelihood, and returned money to the investors with interest and with profit. But keep in mind that past performance is no guarantee of future results, right? This exercise that we're going to go through today is strictly to understand what the terms mean, okay? So let's take a look at this project on the Small Change website, the Marlborough Pike, right? There's my American accent, my fabulous American accent again. The Marlborough Pike project. This is a full cycle deal. And you'll notice here that the way that this particular project was structured was as debt, right? Security type was debt. And the return that was offered to investors was 10% per year. And you can think of that as kind of being like the returns that you might get if you deposited money in a bank, except, as I've said before, money in a bank is guaranteed by the federal government, and money in a real estate isn't. You could lose it. And in this particular case, you'll see that the equity plus 17% was returned in February of 2019. All right, so what does that mean? Well, that means that all the investors who invested in the Marlborough Pike project received a 10% per year return for more than 1 year, right? 1.7 years, I suppose it must have been, a little over a year and a half. So they received all their equity back, all their investment back, plus 10% per year, which in total came to a 17% return. So when you see other projects on the Small Change site or on any other site that talks about investing in debt rather than investing in equity, right? Although it uses the term equity returned, what it means is the investment, then what you are receiving is an interest rate without a share of the profits, all right? So you're investing in the debt. It's more of a secured position. It's less risky. But in return, you don't get as high a return because you're not getting a share of the profits. But you do get an interest. And in this case, it was 10%. Right? So if you'd like to know more about real estate investing and some of the key terms, and to get access to a very detailed training on how to invest in real estate, go to leadersofthecrowd.com/small change. And I will see you in the next video. Thanks much.